Hello and welcome to another Simple Trading Ideas trading tutorial. In this Simple Trading Ideas trading tutorial, we're going to continue with our series on using indicators to make trading decisions. Now in part 5, we're going to look at something that's a bit different than we've been looking at, because essentially we've been looking at entry and exit points. But let's think about all the components of a trading system, a simple trading system, as we have previously covered. Previously, we've spoken of components of a simple trading system, such as what to trade. In our case, we've got that covered. We're trading the QQQ. How much to trade? We've got that covered. We're trading 1,000 shares per trade. How much to risk? Now, that's something that we had not covered, is defining the risk. When to get in, all our entry points based upon our moving averages, and when to get out, currently that's also based upon our moving averages when the moving average triggers a trade in the opposite direction. So that would be all the things we need, but we hadn't covered how much to risk. So that's why now we're going to pop in and we're going to cover risk control using stop loss. Now this term may not be familiar to you, but a stop order is also known as a stop loss order, and it's basically an order to buy or sell at a specified price, and this price is known as the stop price. And when that stop price is reached, that stop order becomes a market order, okay, and then gets filled at the market price at that time, okay. So let's take a look at the chart and I'll give you a clearer indication of what I'm talking about. Okay, here we are in our chart, okay, and what we're looking at is the same 2-period moving average, the blue line that follows the prices very closely, that we had done our experimental optimization on and found it to be the parameter that yielded the greatest net profit. Okay, so we're looking at things. We wanted to experiment, take a look at optimization, and see what effect changing the parameters of an indicator would have on the results, the performance of that particular indicator. Okay, so to make this clearer, what I'm going to do is let me remove that moving average line to kind of unclutter things here. There we go. That's a lot better. Okay, so 2-period moving average, daily chart, daily data of the QQQ. So this was taken, and then the stop price, the stop loss, was also optimized. Or shall I say the stop level was also optimized. And that was optimized between $1 and $10 per share. And as it turns out, $2 per share yielded the highest net profit in this particular case. Okay, so let's scroll back here. Let's find a period where we actually hit our stop loss, because the interesting thing is, you see in a situation like this where we have a small moving average, okay, and this is a 2-day moving average, is that the trades are entered into and exited frequently. Okay, so they're in and out. We're in and out of the trades pretty quickly, and that, in this particular case, doesn't give us many opportunities to actually reach a stop loss that's of that particular size, which is $2 per share, which is why I scrolled back. Now this is very interesting. You'll notice the dollar amounts we're talking about here. Okay, so this is what happened. Okay, we were short. Okay, Okay, then we were long here. Okay, so this close apparently was above the 2-period moving average. So we bought on the open, and let's see, this is roughly $36 per share. Our stop loss would have been placed up here. My mistake, sorry. Our stop loss would have been placed down here. Don't know why I was thinking of that. I had an example of another trade in mind. But our stop loss would be placed below the entry point, okay, of our buy, and that would be a sell stop order. Be down here, and it'd be $2 per share less than the approximately $36 per share we're looking at here. So it'd be right about here. Okay. Okay. So as you can see, the price went down, and it actually hit the stop loss point. We were stopped out for approximately a $2 per share loss. Okay. So again, I had to go back to show you that example because the moving average trades this market frequently because it's a short moving average. Okay, and short, I should say, is a short-term moving average. Shouldn't say short. So many of the words you mention in trading, they sound like they may run together sometimes. Like someone may say sell, but sell and sell short can mean the same things to some people. But selling short means we would basically be shorting the market in anticipation of a downward move. Selling could simply mean that we're closing out a long position or a buy trade. Okay, just wanted to throw that in for purposes of clarification. So what we've done is we've got a 2-period moving average. We've got a $2 per share stop loss that shows up as the winner in our optimization, and we're looking at the action of our simple trading system, our entries, our exits, and our level of risk control. Okay, so let's take a look at the results of the simple trading system, simple 2-day moving average system, with and without the risk control of the stop loss. Okay, now here we are in our Excel spreadsheet, and if you recall, this 27,570 was a result, the total net profit was a result of using a 2-period moving average on daily QQQ data. Okay. Also, you'll see that this number and all these numbers over here are the result of using the $2 per share stop loss. And you'll notice something right off the bat is that the total net profit's a bit more. Okay. You'll notice a couple of other things here, and we'll get into performance metrics at a later time and how significant they are. But as you can see, with the stop loss, there was actually more net profit. Okay. And something else interesting as well is if you look at the total number of trades. Remember now, we're considering always, but we're not taking into consideration in this particular instance the transaction cost involved. Okay. And here you can see we have 557 trades. Here we have actually fewer trades. Okay. If you can make fewer trades, and make more money, all other things being equal, that doesn't sound like a bad thing at all. Now here's something else that's interesting, is the average trade net profit. Okay, 49.5 as opposed to 61.55. Okay, so the the more net profit we could get per trade in a situation like this, that would be desirable. And again, from the standpoint of the number of trades, when you do factor in the transaction cost, quite obviously, the trading system with the greater number of trades is going to have the greatest transaction cost. So 557 trades, obviously, 557 is greater than 543, so it's going to, it's going to cost more. So that it makes perfect sense. I'm going to pop in now and take a look at a couple of the equity curves. First, we'll start with the equity curve we've already seen for the 27,570, and there we go. We mentioned that we're trying to get a start, trying to get another start here, and then we finally broke out up here into positive territory, and we described this equity as underwater equity because it's below the zero line. Okay, so just say the zero is our water level currently. Okay, so something else important is that you see from here all the way through here, that's 0 to, wow, about $15,000 down there. So that's significant because that's our maximum drawdown. It looks like it might be around $15,000. Maybe it may actually be more. The drawdown is basically, the maximum drawdown is basically the largest peak, as you see here, to valley that we have as far as peak to valley dip in equity. Okay, so, and the drawdown is very important because, again, it gives us a measure of the robustness and the survivability of a system. And when we start to think about this, you're thinking, okay, with the, say the QQQ is right around $60,000 currently. So this at this particular point at the $15,000 drawdown that'd be about a 25% reduction in our initial equity. It's very interesting there. So again, the drawdown is very useful from the standpoint of calculating how much working capital you actually need, and that's extremely important. Again, obviously, something with this, with this type of drawdown, you wouldn't start off with a much smaller account. Okay, so if you have a drawdown of a system, and that drawdown is, say, $20,000, then starting with a $20,000 account wouldn't really make much sense because you wouldn't be trading very long. Okay, so this is our original with the 27.5, and this is the equity curve with the $2 per share stop loss figured in. As you can see, right off the bat, at least we get up above zero, but then we come back down. That's a sizable, even though the drawdown from this point of zero down here may seem like less, but this, from this peak here all the way down to here, that's a maximum drawdown, and that's not quite the same size as the previous drawdown we've seen. Okay, so essentially what we've taken a look at in part 5 is we varied the amount of risk that we were taking in our trades, and we changed things just a bit, okay, to make our to put in a stop loss to actually take us out of the trade and to do what a stop loss is supposed to do, and that's control our risk and give us the opportunity to preserve capital when our trading system isn't really in sync with the market at that particular time. Okay, and in all, using the indicators, and when you're using them, you can see the power again of technical analysis, our ability to vary the parameters in order to seek better performance from our systems. And these are just examples. I'm not suggesting by any stretch of the imagination that any of these settings should be used in real trading. This is, again, this is part of the technical analysis. This is part of the research process where you go through and, again, in this particular case, use a moving average in order to make trading decisions. And on that note, we'll stop at this part of the series and we'll continue on in our next segment. Thank you for taking the time to join us for another Simple Trading Ideas trading tutorial. Please feel free to come to our website at www.simpletradingideas.com for more great trading information. Thank you and have a phenomenal day.